Welcome back to Markets Today. 21st of September, first trading day of the week on the NSE. We are joined by Mr. Willis Nalwenge, who is the head of research at Kingdom Securities. Earlier on, we were discussing what was happening on the stock exchange last week. We looked at Safaricom, 115 million shares traded in one day, that was Thursday, and now the ownership is actually only 4% owned by the retail investors and domestic investors of the East African community. We had a very interesting conversation on that. We also talked about the manufacturing sector. We've touched on East African breweries, British American tobacco. We've also touched on the banks. Now, after this break, we want to look at Bamburi Cement and then close off by asking ourselves, what are the trade opportunities for the up-and-coming week? We invite you to join this conversation. Our SMS line is 20186. You could also reach out to us on social media. That's either Mbithe Mwema or at Metropole TV. We want to hear your voice. We want to hear how you make money, how you think you can make money this week, and if you agree or if you have any different points of view based on our conversation. Welcome back, Mr. Nalwenge.
Thank you.
So we're talking about manufacturing, and we ended the conversation at EABL, and I like what you brought out in EABL. There is a point of recovery and a recovery as well in cash flows, and the company is more or less done with its capital expenditure. So expect any futuristic cash flows to find a way to the pockets of investors. I think I really liked how you closed that conversation. Now let's take a look at Bamburi, a stock that went down to 20, tapered at 20. Last week we saw it go all the way to 25.5, then it closed off at about 24.5. What's going on there?
Bamburi, unfortunately, we've seen that they're getting a very big hit in the market, especially the construction sector. Overall, even if you look at the banking results, we've seen that there's been stagnation in the real estate and construction because banks are no longer lending on that front due to the heavy non-performing loans and the nature of the economy that's happening. The good thing about it is that we saw the construction sector picking up a little bit. There was an uptick, if you're looking at H1 of the GDP. There was an uptick on that front. What
was the uptick from? Was it people building, people now buying cement, or was it government construction?
A little bit of the government construction in terms of their target for Big Four agenda. So that's a positive front on that. And also something else we saw is that there is an interest and an uptick on ready mixture for construction purpose. So those are some of the areas that is driving Bamburi's performance upwards. The only problem with the construction industry is that we've seen a little bit of infiltration of imports and also a slowdown on exports. That will have a very big hit on Bamburi. On the positive for Bamburi is that the Ugandan plant has really increased their capacity, which is supplying Burundi and Rwanda. So we're expecting a little bit positive on that front. So that's a good thing about Bamburi.
So that's something to look at, because I know there's been a bit of a spot between Uganda and Rwanda, and Bamburi has actually been unable to sell its cement. Could there be a possibility of a recovery, and could that be positive for this company possibly in the long term?
That region is going to be positive for Bamburi.
Yes.
Remember that as much as there's a conflict between Uganda and Rwanda, which is not economical, it's more political, but economical, they're still trading. The construction boom in Rwanda and Burundi is going to play a very vital role in terms of growth of Bamburi. That is a positive for that.
Okay.
And if the Kenyan economy is able to take an uptick and the government construction, especially with regards to the Big Four agenda targets, they spike up, then Bamburi will be able to be positive on that.
Okay.
The other good thing is that we saw that Bamburi has really reduced on their financial cost, which was a very big thing in terms of their half-year performance. So we expect a little bit of positive news for Bamburi for this particular financial year, and let's wait to see how the economy behaves next year.
Okay, so should we be buying it for at the long term at 20, or is 2024, is it more of a speculative buy?
It remains a speculative.
It's a speculative buy.
Because that spike was very fast for such a short week without any vital fundamental news.
Okay, it's looking like we're all trading on news. You hear something positive, you trade. You hear something negative, you exit the stock. Okay, fair enough. So we've taken a whole look at I think the majority of the stocks. We've looked at utilities, maybe the small caps. We did see a bit of activity on Scan Group, but it's tapered off at 7.8. A bit of activity on Kenya Re. Is there anything happening with this penny stocks, so to speak?
Not much. They remain very good stocks for those who look at the market every single day.
Okay.
Because their returns, it's the market returns are basically technical. The way the graph is going is the way people tend to trade, and that is only beneficial for those who follow the market closely.
Okay.
Anybody who does not follow the market closely might not, that is not their space to play. So anybody who has the risk appetite and is able to follow the market and knows what they're doing in the market remains a very good front in terms of trying to generate quick returns.
Okay.
Anybody making above 7% in those stocks, it's a positive
That's
thing.
a positive.
Yes,
okay.
definitely.
So we've talked about what's happening, we looked at the economy briefly. What do you expect? What are you telling your investors to sort of look out for in this week or in the subsequent week? Where do you put your money? You've told us to profit take on some counters. What are your trade ideas for the week?
For the week, I'm still seeing a little bit of activity in the insurance sector, a little bit of what's it called? Britam. Britam has seen a little bit of action on that front. CIC has stagnated at 1.9, between 1.99 and 2.01.
Okay.
Remember, they did a very 300 million loss. I still believe CIC, anybody who gets to CIC and waits for about 2 years should be able to get a little bit of return. If the stock jumps to about 2.78 to 3 shillings, then that's a very good return for that stock.
Okay.
And again, with the change of management, we're expecting that there will be a new push on that front. Maybe they might be able to take a different trajectory.
All right.
But again, what we've seen is that they are really trying to push digital sales in insurance. It's a tricky environment for insurance products, considering that what we see is what we buy. Digital becomes a very big challenge on that front. On this particular thing.
Okay.
And again, we saw that a lot of insurance companies got a hit in terms of property. So if that turns around, and also with the stock market turning around, then we should be able to see a positive move on that in that sector.
So for the insurance companies, there's Britam, there's CIC, there's Jubilee, there's Sanlam, there's Canary. Which do you like off the top of your head? Like, what's a good company that you'd be comfortable putting money in, as opposed to waiting for all these what-if scenarios in the future?
Personally, I will go with Britam and Liberty Insurance.
Liberty Insurance at the current valuations.
Yes.
Are you concerned by the fact that there will be a change of guard at Britam?
Not much.
Okay.
The size of the company will tell you that not much will be able to move on that front. Remember that we are having the group MD who's shifting. There hasn't been change of the chairman, and most of the management will still remain. So we expect that there will be a continuation in terms of performance on that front.
Okay.
So I don't see that being a very huge factor.
Okay, interesting. So what I hear you saying is, if the market is a bit concerned by the change of guard and it dips, then pick up more on the down.
Yes, that is
fantastic. And why Liberty?
Liberty is one company that has, what I can say is that it has its own strategy, and that they've maintained the market share when everybody else market share is shifting up and down. Liberty Insurance has continued maintaining its market share. It has a consistent growth pattern, especially with regards to their gross premiums. Another thing is that Liberty does not depend heavily on investment income.
Okay.
The other companies depend on about 30% of their total investment income. Liberty is a little bit lower, and if they're able to continue posting profitability without that heavy investment income, then that's a company that shows that their core business continues to drive profitability.
Okay, fantastic.
If you look at the other players, they range between 30 and 35 in terms of investment income, and when that investment income does not positive return, especially if you're going to record a negative capital gain, then that is a very big hit on friend.
Okay.
That is unlike Liberty.
All right, fantastic. So now this is the trading week, and I think we're in September, not too much happening. Is there any other stock that people should probably pay attention to?
Something else I can maybe mention is that the fixed income space is still a very good thing, especially in the short term end.
Okay.
For those who have a 3-month investment strategy, T-bills remain a very good front, especially to park their liquidity, now that the market is not behaving on the upside. So
okay.
maybe
that
investors can also think about that front.
Okay, that's interesting, because a key question we keep getting is the 91 days now at 6.2, 6.3%. Yet when you look at the yields that are coming out from the money market funds, they're between 9 and 10%. So does it make sense to invest directly in the government of Kenya, or should you be able to put your money with a money market manager and get a slightly higher return?
The only difference is if you have the liquidity and the capital to go directly into the government entity, then that will be a very good thing, considering that if you have that level of financing, means that you are financial oriented and you know what you're doing.
Yes.
But if you don't have that much money, if your investment is between maybe, let's say, 1,000 shillings to about 500,000, and you do not want that hassle of trying to manage the market and look at the market, then money market becomes a very big, very good avenue for you, considering that you're giving it to the professions and you don't have to get that hassle of
Okay.
So 9% for somebody who's just parking the money there and retaining, that's a positive thing.
Yes.
But if you know what you're doing in the market, then the stock market remains a very big, a very good platform for you to make continuous returns.
Oh, fantastic. Yes. Any closing remarks, or is it opening remarks for the day, for the trading week ahead?
We still need to see more retailers coming into the market. Let's for retailers, let's not only look at the upside. Let's look at how the market behaves, and whenever you talk to a stockbroker, they should be able to give you advice on which stocks to buy. And I always tell clients is that you need to question as to why they tell you to buy a particular stock.
Yes.
With that front is you get more knowledge about the stock market, you get knowledge about the companies that you're following. And this are market. Let's try and capture it and stop having Safaricom at 4% of total local holdings. So we need to push it a little bit higher and earn from the income that we inject into those companies.
Fantastic. Thank you so much. That was Nalwenge Willis, who is the head of research at Kingdom Securities. And he's telling us you need to know your information, get to understand what's going on, but you also need to own. We can't have a situation where Safaricom is only 4% held by the domestic investors in East Africa. That's Kenya, Tanzania, Uganda, as well as Rwanda. Yet 100%, if not almost 100% of the revenue that this company earns comes from Kenya. So if you are spending on Safaricom, whether it's on money transfers, that's M-Pesa, or whether you're charging for data or voice, you really don't have a reason not to own this stock. This stock is at 30 shillings per share. You need a minimum of 3,000 to invest in it. This is my challenge to you. Can you maybe stop spending less, spend a bit less than you have been spending on it, so that you can be able to at least get 3,000 to invest, if not in this month, in the next month. You can be using all your money and consuming it and not putting part of it aside to invest. Let's change the narrative and let's continue engaging here on Markets Today. It's been a pleasure. Let's see you tomorrow, same time. Good afternoon.